Hello guys, PBA2 here. Last October, the CS market didn't just dip, it fucking crashed. F prices dropped hard within minutes. And investors suddenly realized something uncomfortable. CS skins are not a guaranteed money machine. Because when you look at old cases, when you look at Cato 14 capsules, you can see what's almost Bitcoin level returns. 50x, 100x, or even 10,000x. And when you see numbers like that, it's easy to forget something important. The CS market today isn't some small niche market it was 10 years ago. It's still niche, but it's much bigger. And once a market reaches a certain size, those early days massive returns become impossible. However, there's still lots of opportunities in today's CS2 market that can give you great returns of which stock investors that are aiming for 7% a year could only dream of. I gotta say, the October market crash is quite symbolic for me. We were at an all-time high with a lot of items, then crashed, recovered and went sideways until now. But it especially shows us how fast the market sentiment can change towards the bad, which is why I want to talk about the risks of CS2 investing today. Let's start with the risks that are in our control and they are avoidable, starting off with emotional risks. Because CS investing isn't just numbers, it's psychology. This can be applied to any other market like the stock market, for example. When prices go up for months, when you can see screenshots of 10x returns, when the CS market forum, Reddit and Discord are full of easy money stories, FOMO kicks in, fear of missing out. You stop asking yourself, is this priced correctly? And you start asking, what if I miss the next run? That's how bubbles form. Not because people are stupid, but because momentum of price going up feels safe. I'm sure you've seen what happened to the Stockholm Evil Geniuses holo sticker, going up all the way to $400 and then going back to being irrelevant again. And then when the crash happens, suddenly FOMO turns into FUD. Fear, uncertainty, doubt. The same people who were buying aggressively now rush to sell. But here's the brutal part. The market punishes emotional decisions on both sides. Buying because of FOMO and selling because of FUD are basically the same mistake, which is emotional trading. Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. Don't be the guy who buys high and sells low. The October crash wasn't just a supply shock. It was also a psychological event driven by FUD. You can also see that because we've recovered a lot of this drop already. Here's a few tips how you can handle your emotions a little bit better. First, taking some real money profit can be very calming. If you invested $500 and made $500 profit, I would suggest you go cash out those $500, take $500 profit, because you can tell yourself then, oh, I'm even, I cannot lose money with CS anymore. All the money I'm using is fun money from now on. And secondly, I'd suggest you to have a deep understanding of your investment. This is really necessary to avoid emotional buying or selling. Which brings me to the next avoidable risk, which is buying shit items. Do proper research. Don't buy shit items just because YouTuber XYZ recommended it. Don't buy items because I recommended them. Think logically, educate yourself and discuss with other market participants. Do it just like Jesus says.
Trust the numbers, not your gut.
And hopefully I can help you a little bit with the numbers part too. So leave a sub so I can have a small contribution to finding your great investment. Now let's get to the risks that we cannot avoid, which is basically the main risk that was responsible for the market crash that we've seen in October. Of course, I am talking about the wealth risk. The whole CS economy exists because of the mercy of one company. Wealth. They control everything. Drop pools, trade up mechanics, case releases, skin supply, market rules. And one update can absolutely change everything. They could double the supply, kill an investment thesis, or make a strategy obsolete overnight. If Gaben just wakes up one day and feels like destroying the whole CS community within 10 minutes, there's nothing we can do about that. It's his company, his game, our money, but we do not have some kind of legal claim for our skins because they do belong to wealth. Owning a Counter-Strike skin isn't like owning a stock of a company. There is no thing such as a shareholder vote. There is no transparency requirement from wealth. If we're honest, we're not really investing in the market, we're speculating and trusting wealth not to fuck things up for us. To minimize this risk, you should diversify in different items in the CS market, different cases, different sticker capsules, and different skin collections, patches, etc. You also shouldn't be investing all of your money into CS. I hope that's clear. Get some other assets beside of Counter-Strike skins. The next risk I want to discuss is the political risk. CS skins exist in a legal gray area. Governments are increasingly regulating loot boxes, digital gambling, virtual assets, and if a major region decides to restrict trading or label skin as gambling instruments, a political discussion like we see in New York at the moment, we can see a very strict decline in demand, also driven by FUD. Just imagine what would happen if China or the EU labeled CS skins specifically as gambling. This is why X-Ray already exists in the game for some countries. In my opinion, the Genesis terminal that we have seen could be one way of Valve trying to avoid regulations. We're basically on the same page as Valve for this point, because we want the skins to be expensive and Valve wants to keep the money printer alive, since they are making billions of dollars with CS. And finally, we have the game relevance risk. CS skins only have value because Counter-Strike skins are culturally relevant to young people that like colored pixels on their weapons and see a market for that. If the player base declines long term, or a new competitor like Valorant dominates the market, demand shrinks. Skins don't produce cash flow. They don't generate earnings. Their value is purely demand driven. If attention moves elsewhere, prices follow. I don't think that this is very likely to happen, because Valve is actually doing an amazing job with their majors, but it's something that we should keep in mind. And that's it for today's video. I really hope that you enjoyed watching it, because I'm not sure if this kind of video is getting much attention in the CS investing scene, because it's not a giga profit 10x by now kind of video. I would really like to build a community that's not based on these kind of emotional, catchy titles or thumbnails. So I really hope this is somehow interesting for you guys. Please let me know in the comments. Goodbye.